2, 1. Okay, we're on. We are live. Good morning, everyone. Glad to have you here. We're going to simplify how to structure your business legally. If you have questions, love to take them as we're going along, because if you have a question, it's a good chance that somebody else has exactly the same question. So make sure you get that question answered. What are we going to do this morning? Well, we're going to talk about SCORE just a little bit so you know what you're dealing with here. I'd love to talk about small businesses and why it's important, and how do we legally structure our businesses. The overview, and then we'll take questions also at the end. But if you have questions as we go through it, that would be great. If you want to wait to the end, that's fine. I will stick around until every question is answered. Okay, so SCORE. What's SCORE all about? SCORE is a national organization. It's a resource partner of the Small Business Administration, the SBA. And we currently have over 10,000 volunteers spread around 200 chapters across the United States. And our survey says if you have a SCORE advisor, SCORE mentor, the chances of your business being successful go way up. In the 12 years that I've been here with Akron SCORE, I don't think we've ever lost a business. Some have chosen not to start, which is fine. But once they start, once they're committed to it, they're almost always successful. And here we serve the Akron SCORE serves the 4-county area of Mahoning, Medina, Portage, Summit, and Wayne counties. And we've been in business since 1965. In that time period, we've served lots and lots of people in our local area. Our mission in SCORE is to help small business communities, and we do it through mentoring and education. Our vision is that every small business, every person has the support they need to thrive. That's a bold vision. When we say every person, every business, we mean it. Every person, every business. We've been at it since 1964. We're not there yet, but we're continuing to work on it. So what do? We offer one-on-one counseling, mentoring, advising, consulting. I like the term coaching best because it really describes how we work. We are your business coach. Business coaches or coaches in general never touch the ball. That's the player's job. So your job is to run the plays, start your business. Our job is to make sure you win the game, to be successful. So we're business coaches. It's important to know that this service is free. There's absolutely no charge to you, and it's confidential. So as you get to know your coach, you can tell them about your business, your dreams, your hopes, what you want to get out of it, and know that it's absolutely confidential. We will do it face-to-face if you like. We'll do it by Zoom if you like. We'll do it by phone, whatever works best for you. And sometimes we get calls and people have a question and we answer it, and that's the last time we hear from them. But I have relationships I've had for the 12 years I've been with SCORE. We don't meet as often as we used to. In the early days, we met once a week. But now we're meeting about twice a year, just to stay on target and stay in touch and make sure the business is heading in the right direction, talk strategy, talk growth, that kind of thing. What else we do is we provide workshops, training programs. And you're in one of them now, legally structuring. We run starting your own business, managing business, planning your business, business planning, financial management, all kinds of things. If you go to our website, you will see a list of the things we're currently offering, both locally and nationally. You can sign up right there, right on the spot, and take a workshop. And if you want to connect with a mentor, you'll find us at akron.score.org, or you can call our office, and the nice lady Laura that was talking earlier will answer the phone, maybe. If not, leave a message, and we'll hook you up with somebody that will help you start your business. Question usually comes up, when should I start? With SCORE, I'd say from the time the idea is in the twinkle of your eye, and any time there until you're making so much money you don't need us anymore. But I'd rather have you come early and often rather than late, when maybe you've made some decisions or spent some money you might not should have spent. So call us now. As Laura said, you're going to get a copy of the slides, so you don't need to copy this information down. What about small businesses? Small businesses, I believe, are the economic growth engine in America. There are over 27 million small businesses in the United States, and hundreds of thousands of them are started every single year. And when you look at the employer identification number, the EIN, 99.8% of all businesses are small businesses. They represent half of all goods and services in the US. Half of the US workforce. But maybe more importantly, is small businesses create over 75% of new jobs. So although the big businesses may have half of the goods and services, they're not creating the jobs. Small businesses are creating the jobs. So that's a really important thing for a small area, or the small 5-county area we talk about. We need jobs in these areas. In Mahoning and Wayne and Summit and Portage, we need jobs, and small businesses that are going to create it, not the big guys. So that's why small business is important to us at SCORE. So let me back up before we get into that. Ask if anybody has any questions about SCORE, or what we do, how we do it, who we do it with, who we do it to.
So far, no questions. Anybody have a question they want to ask?
Okay, I'll move on. If we look at the various forms that you can have of a legal structure for your business, there are 4. There's the bootleg, there's the personal ownership, there's corporate ownership, and there's not-for-profit. We have a separate webinar on not-for-profit, so I'm not going to spend a lot of time on that. But that means that there are fundamentally only four fundamental ways to legally structure your business. And when you're thinking about that, there's only 2 things that matter. Decisions should only turn on 2 things. Nothing else really matters. And one is legal liability. If the wheels come off the bus, who gets hurt? What happens to you as the owner? And what are the tax implications? Are taxes easy to do, hard to do? You get taxed once, twice? So those are the only 2 things that matter. So we'll talk about each of those as we go along. The bootleg is back in the day when you had a lemonade stand out in front of your house, and you made the lemonade, mom supplied the cups and the pitcher, and you sold it on the street, put the money in your pocket. And nobody really cared because you weren't making that much money. If you're doing a bootleg, you have no legal structure, you have no legal standing. It probably ought to be a cash business because you don't want any records. You don't pay any taxes, and the risk is all on you. If anything happens, they come after you. You, your house, your car, your cats, your cookies, everything. You can't go public. And if the IRS catches you, good luck. So we definitely do not recommend bootleg legal structures. I know people say, well, you got a business, take money under the table, yada, not recommended. Absolutely not recommended. Just because the risks of if something goes wrong are way too high. So what do we recommend? Well, we recommend one form is personal ownership. And that says you own the business directly. There's nothing between you and the business. You own it directly. It's part of you. A sole proprietorship is one form, has one owner. A general partnership has multiple owners. So you and a bunch of your friends get together and form a business and call it a partnership. You're working together. In a partnership, they can have an unlimited number of partners or owners. You can add partners at any time. The tricky part, though, with partnerships is if you want to get rid of a partner, or if a partner wants to leave, how does that work? So if you're seriously thinking about a personal ownership, and you think about a partnership, please talk with a SCORE coach about what the implications of getting in or getting out of a partnership. In terms of legal liability, the partners, the owners, whether there's one or many, are all totally responsible if the wheels come off the bus. So if something happens, all the partners could get sued. And that's fine. That's not fine. But if the business has really low risk, and I'll give you an example in a second, then that's not a bad form because it's the simplest of all. The owner or owners pay taxes personally right on your 1040, single taxation, doesn't get any easier than that. So I had a client who was a piano teacher, and she teaches piano lessons in your home on your piano, teaching your kids how to play the piano. And she was a sole proprietorship, and there's not much can go wrong there because she's coming to your house using your piano and teaching your kids to play piano. And it's unlikely the homeowners, the mother's going to get upset because the kid can't play piano and sue the piano teacher. That's probably not going to happen. So that worked out fine for her. And that's a fine, and the taxes were simple, and it was easy, easy peasy. The next form is corporate ownership. There are three fundamental structures of corporate ownership. There's the LLC, or the limited liability, and we'll talk about each one of these. There's the S Corp and the C Corporation. With a corporation, the corporation takes total responsibility for problems. The owners, one or many, are fully protected because the entity, the corporation, puts a wall between you and the outside world. The professionals call that the corporate veil. And it's very, very difficult for somebody to pierce that corporate veil. So you're completely protected from the outside world. The taxes, depending on the form, could get complicated. In some cases, you can get taxed twice. But in any case, I think you'd find most people believe if there's some risk involved, the risk is worth a little bit of extra effort. So come back to my piano teacher. She decided that if you came to her house, she could teach a lot more students because she would have no travel time. But now they're coming to her house, they're coming up her driveway, up her slippery walk, maybe tripping on her mat in the entryway. So there's some risk involved. So she formed a corporation, an LLC to be exact, that put that wall between her and the outside world, and she's fine. She's now totally protected. The taxes are a little more complicated because there's another form to fill out, but there's absolutely no risk. So she figured it was worth it. So remember, the only things that matter here are risk. So this protects her from risk, legal liability, and taxes. There's a little more complicated, but it's not that much more complicated. So it worked out just fine for her. Question comes in here. If a husband and wife own a business together, is it considered a sole proprietorship? No, it would be considered a partnership because the two of you own it together. And if you registered it with both of you being owners, then that would be a partnership. Thank you for asking that question. I did answer that question. I think I answered that question live. Okay. Yes. Okay. So corporate ownership comes in three forms. There are more, and they're really esoteric and often the weeds, but let's talk about the most common three of them. The first one is the S Corporation. The S Corporation has shareholders. It can have up to 100, but no more than 100, which is not a problem usually for most small businesses. But if you're a large business, then you plan on growing, that could be a problem. Interesting, the shareholders must be U.S. citizens. Therefore, if you're thinking about ownership across country boundaries, that doesn't work. You raise money through the sale of stock. It's a stock corporation. It must have a board of directors. It's subject to single taxation, though, so the taxes pass through directly to you. So at the end of the year, your accountant would fill out a tax form that says, here's your share of this S corporation. Therefore, here's your income, and here's the taxes that you need to pay. There's a little more administration, especially if there's multiple shareholders, because you've got to divide that up at the end of the year. Usually, if there's a couple of shareholders, you'd want some kind of an annual audit or somebody to look over the books just to make sure that everything is right, although it's not mandated. The other interesting thing is you as an owner can also be an employee up to a certain level. You can't be 100% an employee, but you can be a partial percent. And I would suggest if you're thinking about that, you talk to your tax accountant about that. I've done the numbers, and there's very little tax advantage to doing it. There's in some cases, especially if you have multiple shareholders that want to be actually employees, but it's very limited. The question here, is it better to put the business property, I'm assuming that's stuff that the business owns, in the name of the LLC or personally names? If the business owns the asset, it should be in the name of the business. If you put it in your personal name, then it's not deductible. So let's say you buy a laptop for yourself. That's for yourself. It's not tax deductible. You own it, but there's no tax advantage. If you buy it for the business and the business buys it, then that laptop now is a business asset and it's tax deductible. So I would suggest you put those assets in the name of the business. Having said that, because it's an asset of the business, if the business gets sued, they could take the laptop. I think the tax advantage, it far outweighs the potential risk for doing, assuming you're not running a highly risky business. And oh, by the way, any of these businesses must comply with federal law, which makes a marijuana dispensary problematic because you can't register a business that violates federal law. Just be aware. Okay, S corporation. Does SCORE have any programs that help people get an LLC? The answer to that is, you bet. We will talk you through the process if you need that. And it's not that hard. Most of my clients have been able to do it in 20 to 30 minutes. It's a very simple process. You do it online. It costs you about, I think today it's $99. It's very simple. You can do it from the comfort of your own living room. It's not hard to do at all. So the answer is yes, we will help you. We'll talk you through it. Okay. Thank you for the questions. Appreciate that. The next form after a S corporation is the C corporation. This is the most common. This is the big corporations, the Ford Motors, the General Motors, the Maytags, the big companies, because they want to have an unlimited number of shareholders. Because General Motors and Ford are international companies, they want to be able to have international shareholders. They raise money through the sale of stock. They must have a board of directors. And I will tell you, for this a C corporation, there's a lot of administration. Not only because there's a lot of administration, because the Securities and Exchange Commission, an arm of the federal government, has oversight. The annual audit is mandatory, and this is subject to double taxation. In other words, the corporation puts its books together, pays its taxes on the corporation, then distributes money to the shareholders, and then you as a shareholder pay tax on it. So it's double taxation. In this case, all the shareholders can be employees of the corporation. There's absolutely no restriction on that, whereas the S corporation, there is some restriction. But again, the administration, if you're a simple business, and can be onerous, especially with SEC oversight. I'm not a big fan of government oversight, so the less I can do of that, the better. Okay, another question. What about real estate ownership by the business or by owners and pay rent? You could have a real estate in the name of the owners, and the business could pay rent. That would be perfectly fine. As owners, then that rent income comes to your personal taxes, which is fine, and the business gets to deduct the rent. From a tax standpoint, if you look at it both ways, it doesn't make a whole lot of difference either way. The advantage of keeping the building out of the LLC is if the wheels come off the bus, it's not an asset of the company. So that would be fine. Something you might also consider is having a holding company that owns the real estate that you also own. Just something to think about. If you have questions about why you would do that or how that might work, I would suggest you talk to a lawyer on that. to get your very specific question answered. Okay, thank you for the questions. Love questions. So that's just the C corporation. Now my favorite, and this is the most common for small businesses, is the LLC, or the limited liability corporation. The owners are called members, interestingly enough. I'm not quite sure why. If you raise money, not from sale of stock, but from the members, it's really the best of all worlds for a small business because it can be very, very simple. First of all, it gives you the full corporate veil protection, so you're protected from the outside world. And the IRS calls it a disregarded entity for tax purposes. In other words, they don't recognize the business for tax purposes, so the taxes flow directly to you. So it's simple, 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 which means there's only single level taxation. You can't go public. You can add members, you can subtract members, but you can't sell stock. And if you want to do business internationally, it may not be right for you. And again, you want to check with a lawyer on that if you're thinking of doing business internationally. And if you're not, that's fine. Again, you can have a limited number of you can have an unlimited number of members, but the members can't be employees; they're owners. And they take distributions, not paychecks. And again, that distribution goes directly on your personal taxes. Okay, so we've talked about all the legal structures. We've said sole proprietorship is just you, general partnership is you and some friends. And if you're going to do that, remember, please get some advice on how to get into that partnership, but more important, how to get out of it. If somebody wants out or you want one of the partners out. Limited liability corporation, we talked about the S and C corporation, and the only things that matter are legal liability and tax implications. So as you decide how to do that, think what's the legal liability you want and what are the tax implications. Bootleg, we said at the very beginning, but definitely is not recommended. And if you want to talk about a not-for-profit corporation, a 501c3, that's a separate webinar altogether. Only because it's structured a little different, the implications are different, and the rules of the road are a little different. And one of the differences in sole proprietorships, general partnerships, LLCs, S corps, the owners make all the decisions. That's an important thing. The owners of your sole proprietorship, you make all the decisions. General partnerships, the partners make all the decisions. Same with the LLC, the members make all the decisions. In theory, with the C and the S corporation, the shareholders vote, and therefore they make the major decisions. In a C corporation, that usually those decisions are delegated to a board, board of directors, and that board makes the major decisions, and the shareholders elect the board. Other than that, it's just in 24 minutes. There you have it. That's what it's all about. Question, can you convert the LLC into a C corporation if you decide to go international? The answer is you cannot convert one of these from one to the other. You have to essentially disband the one and restart another one. There's no way to convert one to another. The same way you can't convert a not-profit to a profit corporation. You just have to defunct the one and start all over again. Again, that's not hard to do. It's just a little. There's some hoops to jump through. It's a little bit tricky, not a lot tricky.
There's a couple in the Q&A.
I see it. When you file taxes as an LLC, do you need to also get an EIN number? The answer is with an LLC, because it's a corporation, it must have an EIN. So once you file for your LLC, you then go to the IRS website called irs.gov and you get an EIN. The reason for that is the LLC is a separate legal entity. you are a separate legal entity. There are two legal entities here involved. You just happen to own one of them. So you need a social security number, and the LLC needs its own tax identification number, which turns out to be an EIN. So you file your taxes under your social security number, and you file this business LLCs under its EIN. Isn't an question, another again question, is an LLC safer in case someone sues you? You bet. You can take your personal assets under a sole proprietorship and not an LLC. That is correct, because you are the legal entity as a sole proprietorship. If you get sued, they can come and take your assets, your house, your car, your kids, your cats, your cookies. With an LLC, again, that is the corporate veil, that wall that sits between you and the outside world. So you are completely protected with an LLC. So if you're in doubt, get an LLC. Another question, can you convert an LLC to a not-for-profit? The answer is no. You can't convert any one of these to the other. There is no legal way to do that. You have to defunct the one and start over with the other one. It's not difficult to do. It takes a little time to do, but it's not hard to do. But you can't convert one to the other. And again, you essentially lose that original EIN because it goes away with the first corporation, and then you get a new EIN for the new entity that you're forming. And with a sole proprietorship, you can do a sole proprietorship with your social security number. You can also do a general partnership with your social security numbers. So yes, that works there, but with any of the corporate forms, you must have an EIN.
Oh, let's see, any other questions?
One more question says, can you turn an LLC into a not-for-profit? You did miss that. You can't change one into another. You have to defunct the one and start the other. Ooh, here's one. Is there an advantage for a corporation to own a not-for-profit, small or big, like Ronald McDonald House? Technically, and we get into this in the not-for-profit, Ronald McDonald House isn't owned by McDonald's. It's owned by the community and is represented by a board of directors that represents the community. So McDonald's has limited to no say over what the McDonald House does, because the board of directors for Ronald McDonald House has the complete say over that. And that's one of the fundamental differences between a for-profit business and a not-for-profit. In the for-profit, the owners make all the decisions. In a not-for-profit, the board of directors, which comes from the community in which it serves, they make all the decisions. So they have one, it's tied closely to them. The funding, I think, from most of Ronald McDonald House's funding comes from McDonald's. So there's a real incentive on the part of the board to do what McDonald's wants done, but legally they don't have to. They could spin off and do something else. They'd lose their funding probably, which means that they'd go out of business anyway, but it doesn't happen very often, if ever at all. Okay, I think I've answered all of these at the moment.
Here's one more.
How does
the DBA work? I have an EIN and want to add additional list of services under the brand.
The DBA is a doing business name with no legal status at all. It's just a name. You can do business as it, but it has no legal status. In other words, the original big business that has the EIN number owns the name of the doing business as, but all the taxes and everything rolls up into the original EIN and original LLC. So how might that work? So I'm Al, and I get a shoe business. So we're going to call it Al's Shoes LLC. And I've got my own EIN number. I'm the sole member of the LLC, and I own Al's Shoes LLC. And I decided I'd like to get into a line of socks, but I don't want to call the socks Al's Shoes. I want to call them Al's Socks. So I file for a DBA that's called Al's Socks. So the way I market that is Al's Shoes LLC, doing business as DBA Al's Socks. And all the revenue from Al's Socks flows directly into Al's Shoes because the DBA sits underneath it. Does the LLC remove and protect from liability? It doesn't remove the liability because the liability still is at the corporation, but it removes you from any potential liability. Okay, all righty.
Let's see. Does it cost additional to file a DBA?
Yes, it does. And I'm going to say it's $39. Don't hold me to that, but I think that's if you do that, it's a nominal fee. It's not a lot. The question is, how many DBAs can you have under the EIN? And the answer is there's no legal limit. There's a practical limit on how many do you really want to manage, but the answer is no. So I could have Al's Socks, I could have Al's Shoelaces, I could have Al's Insoles, all under the original LLC of Al's Shoes LLC. So there's no legal limit. But every time I do that, it's going to cost me $39, which may or may not be a big deal. If I'm going to sell $1 million worth of stocks, then I probably don't care. Isn't an LLC safer? Yes, the answer is yes. The LLC is safer, especially if somebody sues you. You certainly would want to carry some kind of insurance on your LLC business. I mean, just to cover the legal costs if there are any. But definitely you're much safer. So if you think there's any risk at all, my recommendation, I think our general recommendation would be that you should use an LLC as that form just to protect you. Even if you're not sure, again, it's better to be safe than sorry, especially in today's world where everybody sues everybody for sometimes not very good reasons. Instead of a DBA, can your LLC create and own another LLC and eventually sell it? The answer is yes, you can. I wouldn't suggest that the LLC own the other LLC. I would suggest that you own both of them. You keep the books separate. And by keeping them separate, it makes it much easier if you want to sell either one of them in the future. They're separate books, they're separate entities. Everything is separate about them. And it makes it clean in terms of what the buyer is buying. So you could put one LLC under the other. There's no legal restriction on that. But if you're going to sell one, it's easier if they're separate entities that stand alone. And you own both of them. So could I just have a main brand name and just list the services offered on my business and not do a DBA since they all relate? Yes, that would be fine. I mean, I could have I could call it Al's Businesses. And under that, I could have a brand called Al's Socks and a brand called Al's Shoes and a brand called Al's, I don't know, Belt. And they're just brand names. I can have brand names. The brand name has no legal entity status, whereas the DBA does. So, for example, just because of the Patriot Act, when people write you checks, they have to write it to the entity that's going to cash that check. So a DBA is a legal entity, and it can cash that check, and the money then flows into the original holding company. If I have a brand, the brand has no legal status as such, no tax status. And therefore, if they write the check to the brand name, so I've got Al's Businesses, and somebody writes me a check to Al's Socks, there is no legal entity called Al's Socks. So I can't cash the check. The bank will not let me do that, and that is the Patriot Act, thank you, 2011, and all the regulations that go in there. Checks that come to you must be in the name of a legal entity. That legal entity has to be filed with the state, have an EIN number with the federal government, and have legal status. And oh, by the way, any LLC filed after the 1st of this year must also file with the beneficial ownership information site. And what that does is it's another place. The website is called FinCen, FINCEN, Financial Center, and you file your beneficial ownership information. In other words, who owns the LLC? And any ownership over 20% must be reported to the Treasury Department. And it's not well publicized. A lot of people don't know about it. And they're certainly going to be in violation of that act at some point if they don't know about it and don't file it. But if you do that, I think your SCORE mentor can advise you on how to do that. It's not very hard. I've done it myself. The tricky part is it wants the picture of your picture ID. And the picture ID has to be less than 4 megabytes. And when I took the picture of my driver's license, it was 4.2, and it wouldn't let me put it in there. So I had to go back to the beginning. So anyway, welcome to the federal government. So, any other questions?
Lots of good questions today.
We had some great questions. Thank you very much. Very interactive.
Somebody said.
Oh, you're welcome. You're welcome, Brian. Try to simplify it, make it easy to understand. And it is easy because that's why there's 27 million of us out there with small businesses.
Somebody wrote, I'm about to set up my business structure, so most likely LLC. I got the EIN last year and did nothing else further. Is that the best route?
Say that again slowly for me. We did what?
I'm about to set up my business structure, most likely an LLC.
Okay.
I got the EIN last year and did nothing else further. Is that the best route?
When you got your EIN, it must have been in the name of the business. That's fine. The only thing now that you need to do business in is take that registration with the state of Ohio and the EIN from the IRS and go down to the bank and open up a business bank account. And from this point forward, all monies that you get go into that business bank account, and all expenses get paid out of that business bank account because that is the bank account for the legal entity, the LLC. And at no point do you ever mix the two. In other words, you don't buy office supplies on your personal credit card and then reimburse yourself. You don't take income that you got and put it in your personal bank account. So income and outgo has to go into and out of your business bank account in the name of that business entity. That is how you protect that legal entity as being separate from you. it's really a legal entity. It does business all on its own. It gets money into itself. It pays bills from itself. You just happen to own it. Once you intermix the two, your personal and your business, you lose that legal protection because you really do not have a separate legal entity when you intermix the two. So, long way of saying, once you have your business, your EIN, and your business bank account, you're good to go.
All right, let's see, anything else? I don't see anything else, Al.
Thank you. Very attentive group this morning. Appreciate that. As Laura said, you'll be getting an email this afternoon with the slides and with the recording. And if she's on the ball, she will send you some of the upcoming webinars so you can register those upcoming webinars.
Yes, and so Sean asked, just wondering who I can speak with next to set up my LLC.
To do that, you go to the SCORE website, which is either score.org, and get a mentor, and it will step you through the process of filling out the application and the questionnaire of what you want. And it will assign you a mentor, and that mentor would, if all's going well, call you within the next 2 or 3 days, and you're off and flying. You can also, if you wish, you can look through the profiles of some mentors and see if you want to pick one, or you can let the system pick it for you. Either one works.
All right, everybody, I think we're all caught up, Al.
We got one more question here. How does money get into the business bank account? The answer is when you provide services, you collect fees for that service. However they pay that fee, if they give it to you in cash, then you put it into the bank account. If they pay by check, it goes into the bank account. If they want to do a wire transfer, electronic transfer, it goes into that bank account. But it's the fee for service that you provide. It's the price you charge for your product or service, and that goes into the bank account. Starting from ground zero, is it okay for me to put money into that account to start with? Absolutely, yes. That's how it gets started. It's your investment. It's your seed money. So the answer is absolutely yes.
All right.
Okay.
Looks like we're caught up.
I think we've just about got it.
All right, everybody, you will get an email from me with this video and the slides, so you have it as a reference. And enjoy the day. Thank you, Al, so much.
Thank you all. Great questions. Thank you so much. You have a wonderful day, everybody.
Bye-bye.